Welcome once again. This is part 4 of our video series on nonprofit organization. And in our last video, what we did is that we calculated our purchases. We calculated our gross profit by transforming or by converting our markup to a margin. And we calculated our gross profit. We calculated our cost of sales. And then we used those figures to calculate our purchases. And when we calculated our purchases, we were able to plug the purchases figure into the control account to help us work out the closing balance for our bar suppliers or our bar creditors. Now, in a previous video, I think part 1 of my video, I would have made an error where I spoke of this $10,000 here was paid all the way to had something to do with prepayments. That was incorrect, because here we are going into our step 4 where we are going to be looking at adjustments for accruals and prepayments. So I wanted to bring this up and make a correction here early because this question here stated, note number 2 stated, rent prepaid in December 2013 represented equal installments to April 30th, 2014. So when they talk about that, they were referring to this $4,200 here, that this $4,200 here was prepaid at the end of December 2013, and because this is 2013 here, and that prepayment was for 4 months of the financial year for 2014, which is from January to April, and it states that that was equal installments. So we need to find out how much rent is paid per month, since they told us about equal installments. And this rent here of $10,000 was paid during the year. So we need to make an adjustment to that $10,000 to find out exactly how much money we need to include in the income statement, in the income and expenditure account for this year of 2014. And because obviously the prepayment, this $4,200 here in prepayment was not included in the previous income and expenditure account, because remember, a prepayment is for another financial year and you must account for it in that financial year and not in the current one. So before we get to adjusting the prepayment for our rent or adjusting our rent account, as I stated, we are looking at our step 4 where we are going to be making adjustments for accruals and prepayment. But the first adjustment that we are going to be looking at is adjusting for our subscription. So that's the first one we are going to do, and we're going to do it by way of the subscription T account. And I want to demonstrate the T account because some examiners at points in time ask you for the subscription account, and if they ask you for the subscription account, you must know how to prepare the T account. Now, if you have a question that doesn't ask you for the subscription account, you can use an adding and subtracting method in order to come up with the figure for your income and expenditure account. But we am going to demonstrate the subscription account. Why we are making an adjustment? Because we have subscriptions in advance at the beginning of financial year of 915, and then at the end of the financial year of 572. We have subscription in arrears at the beginning of the financial year $1,120, and at the end of the year $840. Okay, but during the year, how much did we receive in subscriptions? They received $7,639 in subscriptions. And note number 5 states that subscriptions were written off during the year. So this is why we need to make an adjustment to our subscription account to find out exactly how much subscriptions we are to include inside of our income and expenditure account for the year January 1st to December 31st, 2014. So let's look at the subscription account. And we are going to start with our subscription in arrears. That is going to be on the debit side because this is a revenue account. So subscriptions in arrears at the beginning was $1,120. Subscriptions in advance or prepaid at the beginning were $915. During the year, based on our receipts and payment account, they received $7,639 in subscriptions. So we can add that in. Bank, $7,639. And also we recognize, as I said in note number 5, that we had subscriptions written off during the year. So our subscriptions written off during the year, note number 5 again, $210. Then we can, if we have our subscription in arrears at the beginning on the debit side, that means our subscription in arrears at the end is carried down on the credit side. So you have subscriptions in arrears at the end. That was $840. And then our subscriptions in advance at the end was $572. So we have entered all the information in our subscription account, and now we can work out how much we are supposed to include in our income and expenditure account for subscriptions for the year ended December 31st, 2014. So on the credit side, when we total here on the credit side, that comes to $9,604. But on the debit side, it's only $1,000. I think that's incorrect. Let me make sure that my totals are correct first. On the credit side, our total is $9,604. And on the debit side, it is $1,692. So therefore, we're going to subtract the total on the credit side. We're going to subtract the total on the debit side from the total on the credit side to come up with how much we are including in our income and expenditure for subscriptions for the period. So $9,604 minus $1,692. So our subscriptions to be included in the income and expenditure account, $7,912. $7,912 would be our subscriptions to include in our subscriptions in our income and expenditure account for the period. So we made an adjustment for that. And that's adjustment, and again, I said you can do the subscription account because some examiners ask you for it. But if it is not asked for, you can do an adding and subtracting method by starting with your subscriptions received. And to that, you will subtract your subscriptions in arrears at the beginning. Add your subscriptions in advance at the beginning. Subtract your subscriptions in advance at the end. And add your subscriptions in arrears at the end, and also add your subscriptions written off as well, and it would give you the $7,912. So let's look now at our rent. This is going to take some calculations, but let's go through that, and we are going to use an adding and subtracting method. I'm not going to draw out the T accounts for the accrued or prepayments with respect to our expenses. I'm going to use the adding and subtracting method, but what we're going to work out first is that we're going to work out our monthly installment for our rent, and then we will go from there. So we are going to do our calculations for our rent. And we are going to start with this $4,200 here that they gave us at the beginning. They said that this $4,200 was a prepayment to April 2014. So that's a prepayment for 4 months. And they stated here that the monthly rent installment increased by 20% from July. And they also said that the $4,200 represent equal installments. So if it represents equal installments, we can take the $4,200 and divide it by 4 to come up with the monthly installments, because we need to know the monthly installments so that when we get to July, we can increase that monthly installment by 20%. So let's go through that. So you have $4,200 divided by 4 months, and that would give us $1,050. That would be the monthly installment. So the monthly installment is $1,050. Okay. Now they're stating that that amount, the $4,200, was for January to April. So remember that the year has 12 months. So if money was paid the previous year for January to April, we still have May to December to look for. So let's find out how much money was paid for May to June, because in July it changed. So May to June payment for rent, that would be $1,050 multiplied by 2 months, and that would give us $2,100. Now we have to increase our rent. So increased monthly installment by 20%. So that would be $1,050 plus 20%. So you find the 20% of the $1,050 first, and when you find that 20%, that gives you $210, and then you can add on that's another way. Then you can add on the $1,050 to find out how much it was for the new monthly installment. So when we add 20% to the $1,050, we get a new monthly installment for July of $1,260. So remember, the monthly installment increased from July by 20%. So now the monthly installment is $1,260. So let's see how much they paid for July. So for July to December payments, that would be $1,260 multiplied by 6 months, because that is 6 months, and that gives us $7,560. So $7,560 is the payment for July to December. So let's see how much we are going to account for the entire financial year. That's what we're going to look at for the entire financial year. So amount to be accounted for the financial year would be the $4,200 that was prepaid, plus the $2,100, plus the $7,560. Okay, so when we add all three of those figures, we get $13,860. So that's how much we would account for the financial year. When we come back, we will finish this account.